Welcome to Real Vision. I'm Ash Bennington. Today, I'm joined by Rekt Capital. Rekt, welcome back to Real Vision.
It's awesome to be back, Ash.
Well, it's a pleasure to have you here again. It's been too long. I should say at the outset, we're filming here on Monday, May 11th. Obviously, Rekt, a lot of volatility happening in digital asset markets right now. Let's jump in and walk through. Final point, views expressed about price are those of the guest and don't necessarily reflect the views of Real Vision or me personally.
Yeah, right now we have a very interesting thing going on in the markets, predominantly just looking at this macro range. We have a macro range high, which denotes the previous two peaks in Bitcoin's price action, the first one being in mid-2021 and the November peak in later parts of 2021. Now we're seeing price reach the lower side of that range, the macro range low in green. And one of the key things to mention is that this green area may very well be the bull's last stand, because what we're seeing here is a loss of two trend lines, the black trend line, which is a long-standing higher low, denoting to us that essentially compared to mid-2021, in early 2022, we saw buyers buy Bitcoin at a higher price whenever Bitcoin dipped. But now we're actually seeing that trend line lose itself. We have seen a breakdown, which is just showcasing to us that whatever bullish momentum we were starting to generate in that higher low, that premium buying behavior is now lost. So that bullish tendency in price action is no longer existent. And now we're reaching the macro range low area, which has been a previous support in the past. Specifically, in early 2021, we saw a point of reversal from this support region in the same way we saw a reversal from here in mid-2021. So Bitcoin is essentially, at this point in time, reaching an area of historical demand, reaching an area that has essentially given us two strong reversals towards the upside.
So that gap, Rekt, between the black line and the blue line represents the change in the support level as this goes down below on this chart. Looks like to about 33,610 on the y-axis.
That's right. So the black trend line denotes a long-standing support showcasing premium buying behavior for buyers, but the blue trend line connects the downside wicks in those particular candles. So it just showcases a bit more of a volatile premium buying. But these two trend lines have both been lost, and that premium buying is no longer there anymore. So as we move on to chart number 2, the most important thing to mention is that this range is still very much intact. And on a macro sense, Bitcoin's price action is simply moving sideways, moving from green to red, from 28,000 to 69,000. This is essentially the macro range right now. And macro-wise, this is just consolidation. But the real question that we need to ask right now is this macro reaccumulation? Or is this macro distribution? And as long as this green area holds, then bulls can make a case for this being macro reaccumulation before the next macro uptrend once Bitcoin breaks beyond macro range high of 69K. But of course, once we see some candle closes below the green area, that's when we'll need to have to talk about downside targets, because as we move to chart number 3, we can see that this macro range low on the monthly time frame showcases wicks, loads of downside wicks.
Hey, Rekt, for folks who are relatively new to technical analysis, give us an explanation about candles and wicks and what those represent visually.
Sure. So on this monthly time frame, in mid-2021, we saw long downside wicks into the green area. And this just showcases to us that whenever price reached that green area, there was a fervent buy-side reaction from that region, promoting strong recovery in price towards the upside.
Hey, Rekt, I was going even more basic than that. I was just trying to fill folks in that the wicks represent the range for the period, where the candle represents the open and close of the period.
Right, that's even more basic. That's true. But for me, essentially, it's all about wicks just showcase to us a psychology where people really want to buy or really want to sell. And those wicks in mid 2021 just showcase a strong sense of buy side price action. But if we focus on the early 2022 period, where we see a bit of downside wicking into the green era before that bounce towards 46K in March or April, you can see that there wasn't that strong and fervent of an emotional reaction from that green region. And now, once again, Bitcoin is reaching this macro range low, and it's all about those wicks once again. If Bitcoin is able to perform a monthly close above the blue level, so that's essentially the 35K region, we'll see yet another wick form, which will give us higher time frame confirmation that indeed there is some fervent emotional buying happening in this green region. But the problem is, if we don't see that wick on the monthly time frame, and we see a monthly close below the blue level, and no downside wicking will be apparent here in the monthly chart, then we're going to see that this region may be running out of steam and that buyers aren't as strong as they were before, particularly in mid 2021. So let's talk about potentially this green region not being able to hold because we might not see those downside wicks. Because if we don't see those downside wicks, that just showcases to us perhaps a loss in strength on the buy side and potentially some weakness occurring in that demand area. If we move on to chart number 4, and this is actually an indicator, the Bitcoin logarithmic growth curves that we've been talking about in the previous episode a few months back. And very simplistically, we have these blue vertical lines. These are the halving events. And as you'll notice, after these halving events, after these blue lines, Bitcoin tends to rally quite substantially. And then we see price depreciate after a period of time, after that uptrend ends.
Right. Let's just do an overview for folks who may have forgotten about what those bands represent and why they're so important.
So this is the Bitcoin logarithmic growth curve channel, and we're just going to be focusing on 2 levels of this channel. The top level, which is the red part of the channel, that's typically where Bitcoin bull markets tend to end. And the green level at the very bottom of the channel is where bull markets tend to begin. And the way I think about this at this point in time is right now we're reaching the green bottom of the channel. And historically, this should be where Bitcoin starts to bottom. And this is quite interesting because we're also seeing that this is approximately confluent with the macro range low era that we've been discussing just a moment or two ago. And if this green level, this macro range low gives way, so will the bottom of this channel. And this leads me to my next point. Moving on to chart number 5.
By the way, we should say these are semi-log Y charts, so equal distance changes represent equal percentage changes in price.
So in March 2020, we saw for the first and only time where this channel bottom, this green channel bottom, was lost as a support. We saw a strong breakdown in price, and this period is highlighted with a yellow circle, and it occurred just before the halving of May 2020. And this is the only time that we saw a breakdown from this logarithmic growth curve channel. So my view on this is that if we do indeed break down from this channel once again, we're probably going to see a similar reaction in the sense that we're going to see quite a lot of downside follow, much like in March 2020. So moving on to chart number 6, how much downside actually occurred in March 2020 when that channel bottom was lost? We saw a minus 47% retracement from that point. So moving to chart number 7, if we were to just extrapolate very simplistically that we're going to see a minus 47% crash from the channel bottom, that could see price revisit $18,000. And I'm not saying that this is going to happen because maybe there are different catalysts going on. Of course, in the world in March 2020, we had the whole COVID scare, so it was a lot of uncertainty at that point in time. You could, of course, argue that there is a lot of uncertainty going on in the markets right now. So every time investors tend to say that this time is different. But of course, every time is different in the markets, in cycles, and there's a different narrative there. But what we need to focus on is trying to understand what sort of downside could we expect if Bitcoin indeed loses this key region, this macro range low area, which is a confluence support with the channel bottom.
And this is semi-log Y as well.
Exactly. And it's in terms of the bullish outlook, it's very easy. All Bitcoin needs to do is hold that macro range low area, and the market will remain bullish and we'll see price reverse towards the upside. But we're going to be talking about what if that doesn't happen? What could we expect if that support region doesn't hold? So, a good indicator for this is the 20-month moving average. So, this is chart number 8, showcasing to us that this 20-month moving average, this orange moving average, is a key reference point for Bitcoin's bull and bear trends. And you can see that whenever Bitcoin is above this moving average, we tend to see Bitcoin enjoy an uptrend. But when it loses this moving average as a support, and even turns this moving average into a resistance, as we can see in the leftmost circle, which is red, we see a rejection towards the downside. But of course, conversely, if we see that this moving average flips into a new support where buyers start to appear, we see a nice upside, a nice uptrend emerge afterwards. And this is what the second green circle showcases to us, that once this moving average is a support, we see upside follow afterwards. So essentially, these red circles showcase to us that whenever Bitcoin loses this moving average as a support, we tend to see downside. And the green circles showcase to us that when this is a support, then we see upside in a bull market. So, what we need to talk about is what's going on right now in terms of Bitcoin's price action. So, let's move on to chart number 9. And chart number 9 is showcasing to us that Bitcoin has actually performed a monthly candle close below the orange moving average, the 20-month moving average, which showcases to us that there is very little strength in that moving average as a support, and we're going to see downside from here. So that's an interesting thing, because every time we've lost this moving average as a support, downside has happened in the past. So let's move on to chart number 10 and talk about some of these downside periods. How much has Bitcoin lost in its value, in its price action rather, during those drops? So the left side, the most left, to the very left, we see a drop of 63% once that moving average was lost as a support. And you can see that there was a bit of a strong, there was a lot of strong selling, strong sell side momentum, which ended with a long downside wick once again. So that's showcasing a lot of strong, fervent buy side interest before we saw some price action go sideways for many, many months. So this took a period of quite a few months. In fact, we could count these monthly candles around 9 months or so before Bitcoin broke out from that sideways region following that 63% retracement, before breaking back above the moving average and confirming to us that there is a shift from bear trend to bull trend. So let's now talk about the second retracement. Once Bitcoin lost the moving average as a support, we saw a minus 52, minus 53% retracement. So we saw a strong crash below this moving average, and then yet again a sideways channel where Bitcoin was consolidating at the lows before recovering right back above the moving average, just to give us an indication that we're changing from bear to bull once again. So the commonalities between these two retracements is that there is a sharp crash when Bitcoin loses the moving average as a support. And after that crash, after that capitulation event, we see a sideways range form, which is essentially macro accumulation at lows at the deepest, basically the maximum point of financial opportunity. When we look at these historical trends, this is essentially the generational bottom where we see these sideways channels form. And once this accumulation phase ends, where bargain buyers scoop up cheap Bitcoin at a discount. Once this channel breaks out, we see Bitcoin reverse towards the upside and then enter into a new bull market. And that bull market is confirmed once Bitcoin breaks back above this 20-month moving average, the orange line. So let's talk about this third retracement period because it's a bit different compared to those previous two periods. And this is the March 2020 COVID crash, where we saw this moving average get lost as a support very drastically, very quickly, but the recovery was quite as swift. It was very similar in a sense where we saw a V-shaped bottom form and then a quick recovery as quick as the drop itself. And Bitcoin was able to enter a bear trend, or at least a bear bottom territory, but then get back up the moving average. So essentially, we flipped to bearish once we lost that moving average, and then flipped bullish once again once that moving average was reclaimed as a support. So this is a very different moment in terms of what we've seen in the past. In the past, we'd see a crash followed by a accumulation range and then a recovery into the bull trend. Whereas in March 2020, we saw a much more volatile V-shaped reversal form. And this was a minus 46% retracement.
Rick, what's the time horizon you're using on that moving average?
So this is the 20-month moving average.
And this is a simple moving average that you're using on a 20-month basis?
That's right. Yeah. It's a simple moving average. The EMAs are a little bit more sensitive to short-term price movements. So that's why I've used the MA, which is a bit more of a better representation of historical trends.
Just to smooth out the basis.
So this March 2020 correction was minus 46% deep, which is a little bit shallower compared to the minus 52 and minus 63% correction in recent, or at least previous years, but it was also so much more volatile. So right now, if we focus on the current time, Bitcoin is down 21% from its 20-month moving average. And the question is, if Bitcoin indeed loses this macro range low area that we were talking about at the beginning of the episode, if we indeed lose it as a support, we're going to see further dwindling in the price action of Bitcoin. And that's when we're going to have to start questioning ourselves, are we going to see a 46% retracement, 50, 60% retracement? And just by looking at these trends, we don't have a lot of data points. But if we see a slow bleed, if we do see a retracement continue from this point in time and price action, we'll see a capitulation event in the next few months, followed by potentially a sideways channel forming, which would probably be the maximum point of financial opportunity, especially if we form a base for many, many months. Because previously in the past, a base of many, many months following a strong capitulation, this has preceded a trend reversal from a bear market bottom into a new bull market. However, if we don't see that sort of slow bleed and we actually see a capitulation occur, much like in March 2020, where it's all very volatile, very emotional, perhaps throw in a black swan catalyst in there, then we're going to see a very strong reaction towards the downside, which could actually be followed by an equally and opposite reaction in the sense of buy side interest coming in to reverse the trend towards the upside. So at this point in time, number one, is the macro range going to hold? If it doesn't, then we need to consider downside targets. But if it does hold, then that macro range is still probably going to be a reaccumulation range for as long as that macro range holds. But this episode has been focusing more on what happens if that bull market support fails, because that's kind of the last region that we can look for in terms of tremendous historical support. And if we do indeed lose this region, then we're going to have to pay attention to how will this retrace continue? Will it be a slow bleed? Will it take a few months? And if it does, perhaps we need to be watching out for a capitulation event, but we'd need to be patient at that point in time before forming a sideways range. Conversely, if we see a strong, sharp reaction towards the downside, from this region, entering into the 20K region very sharply, very quickly, that could give us some insight that we might see a V-shaped reversal very similar to what we saw in March 2020. So it's very important to be watching out for how quickly this retrace would progress once that macro range low is lost.
So I know this is kind of the $500 billion question, the $600 billion question, but how do you begin to quantify what that capitulation might look like as you build these ranges to the downside? I know in the chart 7, I believe it was, you used a basis of 47%, which was the last cycle that we saw the lows. Give us a little bit of sense of how you think about what that capitulation might look like.
One of the easiest ways to think about capitulation is these long downside wicks and how quick this sell side momentum is. When we see a very strong crash, we tend to see multiple red candles in a row on the daily time frame, high sell side volume. But then once we see a very strong sell side volume bar, that's typically when we see seller exhaustion, because you can't be selling constantly, consistently, days or weeks, depending on the time frame that you're looking at. You can't be selling consistently for an extended period of time. Sellers are simply going to run out of sell side pressure. And when sellers are tired, bulls don't need to put in much of an effort to just reverse price action towards the upside. So, to answer your question, Ash, capitulation is always all about how quickly we're seeing price retrace deeply, and then watching out for those high volume bars in terms of sell side exhaustion, while also paying attention to any long downside wicks. Because if those long downside wicks occur and start forming, you're seeing seller exhaustion occur, and the buyers don't need to be putting much effort to just generate that wick. So that's essentially, that downside wick is a very good showcase of how strong that buy side reaction is after a period of extended selling and after a period of seller exhaustion.
Let's jump back for a minute to chart 4, if you will. I'm curious to get a sense of how you build these bands for upside and downside potential as a macro sort of framework here. This is based on the price action. How do you think about the sweep of that curve and what the general upward trajectory looks like relative to it?
So these logarithmic Fibonacci curves, they are ascending in nature. So essentially, every month we're going to see these fib curves grow incrementally over time. And at the same time, we see the top of the channel also grow incrementally, but at a slanting slope. So they're not essentially going up all the time, they're slanting a bit. So we're seeing uh, this red top channel denote higher prices, but not in a exponential sense where we're just seeing a straight line up. So what does this really translate into? It essentially might suggest to us that the bull market top is going to be a little bit lower than what we've seen in the past. So essentially, we're seeing a change in how strong these macro uptrends are going to be. We're not going to see the same sort of returns as we've seen in the past, for example. But at the same time, the fact that the bottom of the channel is going up as well, might suggest to us that we might not be seeing the same sort of retracement levels that we've seen in previous bear markets. So in previous bear markets, we've seen an average correction of 84.5%. Perhaps this channel is suggesting to us that we might not see 84.5% in this cycle. We might not see that sort of retracement, because that would essentially mean that Bitcoin would revisit $11,000, I believe. And I don't think that's going to happen. But I do think that this channel could see, should it break down, could see a March 2020 event where we see a capitulation event occur just below this logarithmic growth curve channel. And whatever time Bitcoin spends below the channel, that would be probably a accumulation range, whether it's a V-shaped bottom, before ultimately recovering back into the channel. So, one of the questions that I get asked a lot is that, well, if this is a channel where the top of the channel is a bull market top, how come we haven't seen a bull market top in this cycle touch the top of that channel, touch the red top of the channel before rejecting?
Yeah, it hasn't been close even.
Exactly, exactly. So, one of the theories for this is that Bitcoin is in a mid cycle. And the macro range, for as long as it continues, this is why investors tend to think that this might be macro reaccumulation before Bitcoin actually recovers towards the top of the channel and reaches that red region before topping out. So, as long as that macro reaccumulation range continues to hold, the bottom support region isn't lost, then you could make a case for that occurring. Because if we focus on the first peak in around, when was that? In 2021, we see that Bitcoin peaked against the orange Fibonacci. And if we just cycle to 2013, during that mid-cycle correction, just after November 2012, that halving event, it took around 5 months or so before Bitcoin also wicked towards the orange Fibonacci before enjoying a retracement period, which was quite deep. But then we saw a recovery towards the top of the channel. So many are arguing that, much like in 2013, in 2021, Bitcoin peaked at the orange Fibonacci. And because of that rejection at the orange Fibonacci, we might be in a mid cycle. And that's quite a compelling theory. But the problem with that theory at this point in time is that we've consolidated for an extended period of time to the point where we're actually touching the bottom green channel, which has historically been a point of reversal in terms of determining bear market bottoms. So this sideways, this macro range has continued for too long a period to now touch what is essentially a bear market bottom according to this channel. It's really starting to go all over the place when it comes to this indicator, which is why I feel that this indicator has a chance of failing, in the sense that this green logarithmic growth curve channel bottom might not be the bear market bottom, and that we could see this get lost where we see an overextension towards the downside, much like what we saw in March 2020. And the question is, could we see the top of this logarithmic growth curve channel be revisited at some point in the future? That's a very good question. I think once we see time go on, theoretically, the channel suggests to us that as time goes on, Bitcoin's ultimate price target in the bull market will be higher and higher, right? Because as this red channel top is inclining, we're seeing higher prices get denoted by this channel top. So if we do see a crash below the logarithmic growth curve channel, probably in that next bull market, as we approach the next halving, perhaps there would be a chance of revisiting that red region. But at the same time, are we seeing some sort of change happen in this channel? Because the green bottom of the channel isn't necessarily being a bear market bottom anymore, although that still remains to be seen. Maybe we have to see some downside overextension and see a crash below the channel. So is this channel shifting where now perhaps the orange Fibonacci is going to be the top of this channel and the red top of the channel isn't going to be that bull market topping out structure anymore? Maybe this channel is now changing. These Fibonacci's are now starting to mean something entirely different. The Fibonacci, the orange Fibonacci could be the bull market top region now, and the green Fibonacci at the bottom of the channel could just be an indicator that now the opportunity cost for not paying attention to the charts right now is too high, that perhaps once this green base is lost, the bottom of the channel, this green level, once that's lost, that's when we need to be paying attention, because Bitcoin might be actually entering a region of outsized historical return for investors.
Rekt, how much data will you need to see before you can make a determination of whether those Fibonacci channels have changed from their historical precedents?
I think if Bitcoin were to suddenly lose the channel bottom and then see some sort of capitulation event and then recover back into the channel, I think the channel itself wouldn't have changed too dramatically. However, if we do see a capitulation event and then a slow bleed occur, just like what we saw underneath the 20 moving average, then we're going to start to see this channel change very much so. In fact, Bitcoin wouldn't occupy that channel for many, many months. And then a reaccumulation range at the very bottom, at the generational bottom, would take place. But this would be all taking place just below the channel. So I think if that sort of slow bleed were to take place, where we see many, many months of just slow retracement take place outside of the channel, this channel is definitely going to lose some semblance of being a good indicator when we see bottoms and when we see tops. But nonetheless, it could still be useful in just giving us an idea as to when we're seeing price get overbought or oversold. Are we getting closer to a bear market bottom? And I think losing this green level would be a good indication that we have a bit more retracement left to go, but that is definitely time to start paying attention, especially if you're a long-term investor and you're thinking about getting in to Bitcoin for the long term. Just watching out for that sort of scenario to deviate from this Bitcoin logarithmic growth curve, that's something definitely interesting to look at, because if we're seeing deviation below a region which has historically seen bull market reversals, then we're entering this sort of, in football we'd call it extra time, where really, wow, okay, this is where perhaps potential we could see a bit of potential, definitely some more downside action, but definitely patience, paying attention to that period of downside price action which is overextended, and watching out for those that sell side exhaustion, high seller uh, volume bars, and at the same time, long downside wicks towards downside, to just watch out for a base forming, capitulation developing, and a range potentially forming as well.
Yeah. And how many months would you be looking to see to understand whether that kind of structural shift had taken place? Are we talking about 2, 4, 6?
So that's a very good question. And perhaps we should move on to chart number 10 to address this question. Because if Bitcoin loses this channel this month at the end of May, then from June we'll probably see downside occur. And if that isn't sharp downside, then just by looking at this 20-month moving average, we've seen that this downside could be, should it be a slow bleed, of course, this downside before a sideways multi-month range at lows forms, this downside could be around 3, 4, 5 months, or 4 months. So 3 to 5 months before we see that capitulation event form, with that long downside wick to just demark the bottom before a range forms. And that range could last anything from 2, 6 months to even as long as 9 months plus. So it really does depend. The capitulation won't necessarily take too long, but it's actually the sideways movement that's going to really bore investors and really demotivate them. That's when morale is at its lowest. And that's when maximum pessimism exists the most in the market. But at the same time, maximum pessimism goes hand in hand with extreme fear, but both precede financial opportunity.
Rekt, as always, great charts here today. Final thoughts, key takeaways that you'd like to leave our audience with.
I think it's really important to be watching out for that macro range low area, because that's the bull's last stand in terms of holding on to that macro reaccumulation thesis. Is this macro reaccumulation? Yes, as long as that bull market support holds. But if it gets lost, then we're going to see macro distribution. And at the same time, we're going to see the loss of the logarithmic growth curve channel as a support. And we're going to enter a period of overextension towards the downside, which could take a few months. How many months? 4 to 6 months of downside before that long downside wick into a capitulation event, which would precede a multi-month sideways channel. That's at least the slow bleed scenario if we were to see an extended retrace take a long time to just develop and fully mature. But at the same time, if we see the macro range low area get lost as a support and the logarithmic growth curve channel bottom gets lost as a support as well, then we're going to see we have to pay attention to how quickly and sharp that retrace will be, because there are only two scenarios once that support area is lost. Is it going to be the multi-month slow bleed into capitulation before a sideways range forms, which would essentially be an accumulation range at the bear market bottom? Or scenario number two, is it going to be a sharp correction, very deep, very volatile, just like in March 2020? We have to watch out for those two scenarios. And just by looking at the price action, once that support region does get lost, if we see price not doing much, but just kind of going down slowly but surely, we're probably not going to get that volatile March 2020 style. And we might have to just brace ourselves for a period of extended price action. But nonetheless, a good time to be paying attention to the market, because that's where you'll be able to start potentially dollar cost averaging into a better and better market, in a sense where we're seeing extreme fear and maximum pessimism, but Bitcoin is getting into a deeper and deeper discount before finally bottoming and boring investors to death with a sideways range. But nonetheless, it would be historically speaking, a point of reversal for those who are patient.
Rekt, as always, a pleasure to have you with us here on Real Vision.
Thank you so much, Ash. It's a pleasure to be back here on Real Vision, and I can't wait to be back soon.
Thanks for watching, everyone.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.